right, let's play a game. It's called Find the Zones. No, but all jokes aside, I'm going to walk through this. This is NQ, right? On the daily. Settlement is off, right? So it's just standard close. And we're going to walk through how I find these levels, and hopefully that'll explain it a little bit. So this was when we were reaching previous highs, right? So very simple. This was the resistance, right? That was the dominant candle, the most significant in this price range at the time. You mark, right, the body. Obviously, there's no wicks on this. This is an old contract, but interesting enough, right? Or it was, I'm sorry, it was a new contract at the time. Interesting enough, look where price ran to here, right? Ran right to that zone, dropped and came back. So that's what it would have looked like. You can see how price came up and tested it and dropped. So it was a perfect target. So here we came up. We did not get a daily close above. So price pulled back. We were still bullish, of course, bounced, pushed up, closed inside again. So let's move forward and we'll just work with the zones. You guys know what happened, of course. Got a big push up, right? So there's your bullish close above. So now you can say to yourself, okay, I know that this supply, right? This is an old supply now. Okay, it's an old zone. So I make it dotted for what it's worth. I mark that line dotted. And now there's a new dominant candle underneath current price. That's the bearish, right? When I'm looking for demand, I'm looking for a bearish candle close. When I'm looking for supply, I'm looking for a bullish candle close. I expect price to come back and retest this zone, but I want to keep in mind that price can also come down to the bottom of this because the new zone is truly right here. And I don't want to confuse it too much, but I want you to see what the chart would look like, right? So that would be this is how it would look if I was doing this again, all from scratch. I have my new demand zone, okay, but I also have the old supply. They obviously overlap, so you don't have to get so complicated. But when you're looking for specific ranges, trading on the smaller time frames, that's good to know. But let's watch, see what happens, right? Oh, look, price comes back, retests the zone, holds it, doesn't close back below, and therefore you get long and price starts moving up. Now, again, this is still acting. I'm going to delete this so it doesn't get, I would update these obviously every day, every couple days, whatever it takes. So I know that this is previous highs, but we already have a zone marked out there. So that, in my case, is going to go. We're going to move on over here and focus on current candles. All right, so now we're looking and we're just going to watch price, right? Where's our highest closing candle body? Right there. So that would be I wouldn't call this a whole supply zone, but that's the resistance level. And you can see it's tapping the highs. So now what I'm looking for is, a candle to move up over top and close above. So this is a great example, right? This candle it pushed up, but we closed back underneath. So what did price do again? It came down and retested the demand zone again. So you can see how these zones act as indicators of where price is is going to happen, right? Where the action is going to happen. You couldn't get a close above, so price came down and retested it. Not a huge surprise, right? If you were watching this midday, this was a Tuesday, right? What's that, July 15th? And we were probably even trading it. I don't know. Maybe I was in New York. But point being that price closed back, underneath this resistance level. And then it came down, it retested demand, pushed back up. Now you got to close above. Now you can move higher. So I don't know if you can see that, but zoom in. This daily close finally closed above. Price pulled back. Happened to retest the daily 9 EMA. That's what this gray line is. But it could have come back deeper. But the point being that close above the previous resistance is normally a pretty good signal that bulls are in control. So you buy the retest, boom, price launches, right? All right, so let's just keep moving with this. I'm going to try to keep this somewhat light, but so point being, this is still the dominant candle, right? All price out to this new candle has tested this zone. So none of these bearish candles are going to act as demand because the price, price after the candle was created came back. It's still interacting with this dominant or significant, whatever, candle body that's bearish. And so that is still my demand zone. So let's keep going. This is a good example, I guess. All right, so here you can still work your way up on these, right? Obviously, this is in a trend. So as price moves up, now I'm looking at it like this. I'm looking, okay, where's my new dominant candle, right? Well, it would be right here. So now technically this would be turned, and I might even delete this. I don't know. Sometimes you'll see it on my, like I'll turn that into a dotted line. So where's the new dominant candle, the lowest closing bullish candle? I would say it's this. Now, sometimes I'll use the wick. Okay. So I could say like this is the bearish dominant because when you get a doji, um, a lot of times I'll use the wick on the skinnier dojis. But let's just say, well, not let's just say, but this is not skinny enough to do that with, I guess is my point. So this is the new demand zone. So stay with me because hopefully this explains some of it. So that's the new demand. And you can even see you got to close above. This came back, retested this general area, closed back above, okay, which is a bullish signal. It says, okay, bears tried to take it down. It dipped into where the area where we expect buyers, and it pushed price back up, closed the day. So upon open, what happened? Price dipped back, retested that, but buyers were staying, they were there waiting and they started to buy it. So does it follow through? Got a gap up. That day was pretty lame. Starting to see some sellers step in, and look what price does here, right? You see this weakness. So what does it do? It comes back down and it almost tests this zone. It got pretty close, right? I mean, you're within, what is that, 356 to 339. So again, that's big if you're intraday trading, but at the same time, price is getting back near an area where buyers expect to step in. And on the smaller time frames, you can start to see that and say, hey, I have confidence the price is going to get bought up here again, or at least my risk to reward setup is there. All right, so here we go. We keep pushing and boom. I haven't walked through this, guys. I'm doing this in real time. So and I don't remember exactly what candles have done. So that's a huge move, right? So price finally came back, tagged this demand zone, closed inside of it. So that's the first sign that, okay, I didn't get the close back above. It doesn't mean price can't push up, but that doesn't look as great as I want, right? I'm not even sure where this goes, but it would make me, yeah. So here's a good example. And look what it fucking does. It goes right back to this demand zone. I mean, it's almost too perfect. You got the close back inside the zone, signal of weakness. Price pushes up, retests the top of the zone, basically, right? Can't get above it because sellers are sitting there now, and boom, slams it down. Now, granted, these are daily candles, so this shit could happen overnight. You could chop around all throughout, Asia and London. You'd have to zoom in a little bit, but the point is that this is a good way of representing where you can target and kind of get a signal from, right? That close inside of the demand zone up here signals weakness. You get a retest start to come down, it breaks below the zone and it goes all the way to the demand zone, the next demand zone, which makes sense because there's no other dominant candles in here, dominant bearish candles. Because this bearish candle, again, we talked about this candle, the candle following it the next day came down and still interacted with this demand zone. So that's your demand zone, right? All right, let's push this out. Okay, buyers stepped in, and I should have said this beforehand, but see how we tested demand and then closed above it, right? See how it closed just on top of the zone. Again, that's where the signal comes from. So you opened the next day with a little bit of a gap down, had a slight dip, but buyers stepped in and pushed it up. It's not always this perfect, but it does work a lot of the time. So just, I recommend keeping an eye on it. Here's a false signal. We got back above that old demand, although it is an old demand at this point, so you got to be a little careful. And it retraced back down, so that's a perfect example. Now, the new thing here that I would say is two things. This candle doesn't really, or this level doesn't matter as much to me anymore, and this zone should be moved up because we want to look for the supply zone above now that prices moved down. And this demand, I'm less interested in. We will mark it out, but with a dotted. So when looking for supply zones, we're looking at the highest closing bullish candle, right? So highest closing bullish candle, obviously. So that would be this guy here. I would move this up. You know, you can move this up and say, okay, just identify where this is at. So we know the zone was there. I guess you could even leave this here. Let's just leave it for now. All right, so that's our structure now. But again, our new, like the real range is the supply zone up here, demand zone down here. Okay, because these zones in between or these levels in between don't mean as much anymore because that was the old demand. Obviously, that got invalidated when you had this monster bearish close, pushed up, pushed back down. Let's see how it plays out. No, and here's a good example. That level did come in handy, and we're pushing back up, and we almost touched supply. Not quite, but we're right there, right? Getting right up near the supply zone, the dominant bullish candle, and and sellers stepped in and kind of closed it here. Let's see where it goes after this. All right, perfect. So yeah, and here you can see some interaction with these levels. I'd make them dotted though, so that I don't get confused when I'm zoomed in on the hourly or the 5 minute or the 4 hour or whatever, 15 minute, 10 minute. It doesn't matter. I can recognize that hey, it's a gray dotted line, so I know it's an old daily level. And then if I need to see what exactly it was, I can zoom out. So yeah, look what we did. Pushed up, went to the top of the supply zone, but closed inside. So that's encouraging, although it's not a long signal. I don't get long signals until you get a close over top. So let's see what happens. All right, so there's your bullish close above. Okay, there's your retest. So now I'm looking for longs going higher. And there it is. I'm going to play this out a little bit so you guys can get an idea. All right, so now we're back to the same scenario here. So I guess the thing to do here is to do this. So again, this would be, see, I would do this like every day, so it's not as big of a deal. It just seems monotonous right now. But that's an old zone, right? So where's my new demand zone? It's the dominant candle previously to price, the next dominant candle, bearish close. So it would be this guy here, right? And this just evolves as time goes on. So I would move this up. Maybe I'd leave the zone down below. I mean, some of these might get confusing, but again, as you're going through this day by day, it's less confusing because you're not really as concerned. Like you're not going to get confused by it. But these levels still matter on the daily. So let's see what happens now. Now you have a perfect retracement down to demand. Okay, this is your new demand zone. You also have a retest of previous supply right here, right? I'm going to get rid of some of these because I would not have these on at this point. I think I would just get rid of them and I would say, look, that's my previous supply. This is demand. And now I have another significant. So what's the next lowest closing bearish candle, right? Well, we know we have demand down here. There's this one right here. This is kind of in its own range, okay? So I would mark this out, and you guys have probably seen it. I probably have. Where that's a legitimate demand zone, just kind of in the middle hanging out. So again, you can see the structure, hopefully. So here we have demand. Let's see what happens. Boom. Big move through. So I would be getting long here. I would be looking for longs and completely get wiped. So again, here's a good indication. Didn't work out here. But what it does do is it goes down, it tags this demand zone here, bounces up, closed inside. So that's not super exciting. We have another day inside, then we get a push up. So again, there's no signal here, but look what it does. It runs up to that old zone. And you could argue, or not even argue, but technically, this bullish candle becomes the new supply. Okay, so this bullish candle is now the highest closing bullish candle. And the thing is, it makes sense because these zones do reset. Okay, and it's just the idea, but you could say, hey, it's retesting the zone that it broke down. I don't want to get overly confused here, but I would call that the new supply. I would be watching this level up here, the close of that candle, if price moves higher. So let's see what happens. I don't think it did right away. There's the bounce in between, consolidating. Now we got to move up, and that actually closed almost right at that level. And now we're at current price, right? Anyways, guys, keep an eye on that. That's what I would be looking for here. I would say at this point, this is my supply. This is the zone you want to watch for sellers to step in, right? All of these candles are interacting with the supply zone. So there's not really, you could argue that, hey, that could be a demand zone and we closed underneath it, but it's getting too mixed up. Okay. So what I would do is I'm just going to delete that, or what I am doing, delete that. And now I know that, hey, supply is up here. This is a demand zone that has been interacted with. So I expect buyers to be in this general area. And then my main demand zone is down here. And this is all just on the daily. And that's it. So, watch for the candle closes to kind of get the signal. And we saw a bunch of examples of that. We saw one good example where the old demand, right, it looked like it was closing above and then it fell out. So like it's a good representation of the average of how much this works, right? You might get 4 good ones and then 1 bad one. So maybe it works. I don't even know if I'd say 80% of the time, maybe 65, 70%. But with the proper risk management and then zooming into the lower levels, there's fucking no way you can lose if you stick to this. And a few people that I've taught over the years it's kind of clicked, and the people who it really worked for, watch the videos, right? I used to do live classes as well, almost every other night it seemed like, or 3 times a week. But they would put it on their own chart. So like they would say, okay, where's this zone, and they would mark it, and then they would watch price kind of interact with it. And I think that is the key. So if you're interested in this, pull up this chart, make sure your settlement is off. The set button down here is not highlighted. If you highlight it, it's going to change a little bit. Okay, look at the close on this. It changed, right? So I have it off for ES and NQ. I leave it on for gold. Sometimes I think oil I leave it on for as well. I'd have to double check, but the point is the structure is here. So yeah, if you're interested, I definitely recommend putting it on your chart. Take a look at it, right? And then just kind of watch price go around with it. This is the daily, but I do the same with the hourly and the 4-hour. The daily and weekly zones are much stronger. They tend to be much more successful. The hourly zones will have more false signals than the 4-hour, and the 4-hour will have more false signals than the daily, right? It's just as you get into these higher time frames, the structure matters more for whatever the reason is. So, and I don't really have a good reason on why this works. I do think it has to do with the fact that the market is algo driven. There are, when you're programming an algo, like how do you tell a computer where the price structure is at to buy and sell if you're using a chart? You would have to have some characteristics that are definitive, right? Definite characteristics. And what this does is, even if this isn't an algo, or even if that has nothing to do with algos, it gives me a definitive structure to the chart that I can now base my trade off of and base my risk off of. So my risk profile is now something definitive that I can say, okay, here it is, here's this, here's that. So anyways, that's it, guys. Hope it works or it's something helpful. And if you have any questions, let me know, of course. See ya.